Hey, brothers, sisters, and everybody. This is Vinney Chopra here in my office, virtual office. Actually, that's my real office in the background. But now I can be anywhere in the country, in the world, and I can do my, business. Well, last 21 days I spent in Morocco, never opened the laptop, never opened my phone. I loved it, loved it. I leave again in May. And I don't know when you will be watching me or listening me, 25 days to Eastern Europe and Portugal with my family and everything and spend $100,000. Why do we make money? We should not be worried about at all. When you're making money, spend the money, spend the money. Anybody listening to me, please watch me on all these different channels, YouTube, of course, LinkedIn, TikTok, for Instagram, and Facebook. And I do 2 shows, everybody. Please watch those shows. Abundance Mindset with Vinney Chopra, Thursday morning at 9 a.m. Pacific. The second, which is a weekly show, also Vinney and Bo Show. That's at 9 a.m. every week on the clock. And then I have my podcast, which is this one that you're listening to or watching in the YouTube and everything. That's Apartment Syndication Made Easy. My 3rd book is coming out, Senior Living Investing. So thank you. I've got a great friend, Justin Moyes, in the house, and I'm going to be asking him his superpowers and how he's gone into multifamily. A lot of my followers are doing very well. Some of my personal coaching students are doing 200 million in 2 years, 200 million, 300 million. It's mind-boggling what I teach my students. So anybody is interested in my personal coaching, I take 3 students a year, but my group coaching, I do Wednesdays. As many people can come in the group coaching. I teach 1.5 hours solid, and we record it, and you get all my document library, everything I've designed in the last 19 years on a silver platter in that one. And then, thank you, brother. Justin, tell us more about you, who you are, and who is Justin Moyes? Tell me that.
Yeah, Vinney, so great to be on the show. I've listened for a while and love to be on this side of it now. So yeah, a little bit about me. I'll give the really short story on it. I've been in real estate my whole professional life. I got my very first job when I was 17. My first office job was in a commercial real estate company. And I was doing analytics. I was an intern there. And I sat right across the hall from the top producer in the office, and he sold warehouses. Wow. And, everybody really always idolized this guy and say, hey, that's the man, that's the guy you got to go to if you have any questions, advice, you need something, like that's the guy. He knows everybody in town. And, he's really well networked, and he really has, his life on point. And that's really what triggered me to go into real estate. Is honestly, I said, man, that guy, that's who I want to be about.
I love
it. When I turned 18, I got my real estate license because I thought I wanted to be a broker. And I did the broker game for a couple of years. And Vinney, this is an interesting story. So anybody who doesn't know, brokers 100% commission only.
Yes.
You don't sell, you don't eat. And, when I got into the game, I went 6 months without making a single sale. Now, the interesting part is, I would cold call people all the time. And I was cold calling all day, every day for 6 months, no leads, no leads, no leads. Wow. I'd taken my headset off. I'd put it down. It was 7 p.m. at night. I was the last one in the office. And I remember thinking, I'm going to leave and I'm never going to come back.
Oh, wow.
It was a waste of time. What am I going to tell my friends and family? I have to tell them I quit, right? Because the first thing you do when you get your license, you tell everybody, I'm in real estate now. Who do you know that's on, And I said, man, I have to walk back on that now. How embarrassing. And as I was leaving, I saw one more, for sale by owner pop up on Craigslist. And I stared at that listing and I said, sure, why not? One more and I'll be done forever. Just one more won't hurt. Made the call. And that was the first person who'd ever told me yes to a listing appointment. The very first one. And she said, yes, why don't you come by tomorrow? And I literally didn't even know what to say. Nobody had ever told me yes before. So I said, okay, and I showed up the next day, listed her home, bought her home. And that was my very first sale. My very first payday is $60,000 commission check.
Oh my gosh.
So, after that, I fell in love with the rush of real estate. I fell in love with, chase the process, not the outcome, and the outcome will make its way to you. And really, I transitioned about 5 years ago into the investment space because I realized I was transactionally rich, but I was working very long hours, and it was taking a toll on my mental health, my personal relationships.
Yes.
So I moved sides of the desk again and became an owner into the multifamily syndication space. And I've loved it ever since.
Oh my gosh, that's amazing. I know a lot of my followers, they want to do, or they are in the edge of, and they're already started and they're moving. It's got varied, audience of my audience. So tell me, what were some three challenges that you had to overcome to start syndication?
Yeah. The first challenge is an educational hurdle. So, a lot of people go into multifamily or some type of commercial syndication, not all the time, but a lot have some type of background, usually in residential real estate. They were an appraiser or a broker, or they own a couple single family rentals, something like that. But I was really surprised at still how different the space is from single family. I thought, oh, this is going to be great. I have a leg up on all the other new people. I've been a broker. And then I find out that everybody kind of has some good single family knowledge there. But the learning curve is still fairly intense given my experience in real estate. I still had to learn quite a bit. So the first was definitely the learning curve of it. The second was how much more team oriented it was, which I love. Now, back in the single family space, you might have real estate teams, and we had a small team, but it was more common to be a solo operator, a solo broker. It was much more common. But in the commercial space, it's almost flip-flop. You don't really see a lot of single people, a lot of individuals. Everybody has a team. Even the brokers have a team, and everybody teams up to do these things. So I had to get used to that. I was so used to, hey, you eat what you kill, you're on your own on that island, to, okay, now I need to expand my team. I don't need to be the everything man anymore. I can go deep into one aspect of the business and really have a team take care of the rest.
Very good.
That was the second. And the third really was wrapping my head around, the burden, but also the reward of handling other people's money. It's a burden and it's a reward, because you're opening up investments to people who otherwise would just have no option to do something like this, at least not intelligently. But every good syndicator, they have somewhat of that thing in the back of their head that, the risk is a little bit higher. If it's just my money, I'm okay. Investing in certain things. But when you deal with other people's, it's a different level of burden, but it's a different level of satisfaction when things go really well. And you see people's eyes light up and they're like, oh my God, like, I can't believe I should have been doing this for 20 years. But you're doing it now. So I would say those are the three biggest things that I've overcome and worked through too.
Very well put, brother. Because the thing is, you got to make sure you're taking care of other people's money better than your money.
Yeah.
That's what my wife, I remember when I started 16, 18 years back, she was very, very, she didn't want us to. Even some very good friend wrote us a check and mailed it to me, $100,000. We called him, and that evening we went to his place. To give the money back. I remember that distinctly. And then he has given me millions of dollars now. Yesterday, he committed $750,000.
And it just starts
this hotel
like
that I'm buying, brother. Oh my gosh, I cannot believe it. But the thing is, you got to really learn syndication, the SEC ruling, all the things, the transparency, the curing, all those things, 506B and C. You don't just jump into anything, but learn everything. So tell me more about the, first investor. And how much you collected, and how long did you have to court the first investor? What was the turning point? They said, yes, I'll give you money, Justin.
Yeah. Interestingly enough, my first investor that wasn't me or like my dad, right? My first investor was a friend of a friend. And it's so interesting because they say, the first thing you do when you get into this business, just call everybody you know. You never know whose situation is what. Just call everybody you know. This was this friend that, to use the word friend might be a little bit generous. We hadn't spoken since high school. I haven't seen this person, heard of this person for, maybe 10 years at this point, maybe longer. And I just forget it. I'm going to call them. And I remember the first thing I did was, and this was around the new year, it was like January time period of whatever, 5 years ago. And I had said, hey, I don't know if you remember me, but this is Justin. We went to high school together. And they said, yeah, of course, Justin, how are you? Wow, I couldn't believe that you remember me.
Yeah.
And I said, hey, I'm doing this thing this year. I'm just kind of calling people who I feel I've lost touch with. And I just
Sure.
wanted to know what you've been up to. Well, how's life been? And, we had like a 45-minute conversation about, he's engaged now and where they moved to and they're moving to this place next. And then of course it naturally comes back to, well, what have you been up to? I said, well, interesting. I'm doing this thing, real estate syndication. I start talking about it. And he goes, man, that sounds really, really awesome. I don't really have money for that right now. And which is totally fine. I didn't really expect him to say, yeah, here's my money. I said, hey, no problem, man. And just as I was about to, kind of part ways, he said, by the way, my friend has been talking about wanting to get into real estate, but really busy guy, has never really done it. Let me ask him about it. Right. And I said, okay, sure. That sounds good. Never really expecting something to come from right. But then one day I got a text message from an unknown number and it said, hey, this is my name. This person gave me your info. He said, you have some cool real estate stuff going on. I think we should get in touch. Oh. And so it was, a friend of a friend of, somebody who I hadn't spoken to in a long time. And I didn't have a deal right then. So I kept up with him for about a year. And then when we had that first deal, that was the first investor. Yeah.
Applaud you, brother. Applaud you. I think what I learned from you is that so good is that, I tell my students also, your first 20 investors are in your Rolodex. Nobody uses Rolodex now, right? Yeah. In your contact list, first 20, it will be those 20 or somebody they know.
Yeah.
Or somebody they know. That's what happened in your life, right? Yeah. You gave him positively, enthusiastically, kind of told him what you're doing. And then he said, oh my gosh, somebody else is thinking about it. Look at that. I mean, that's what I also say that everybody I teach also in my podcast is that podcast, right? I'm recording right now. I look at one investor as not one, but 20 investors behind. Yeah. Wow. That's why I'm able to raise $10 million in a day, $9 million in 9 hours, and $25 million in one day. $25 million, brother. Man. So the thing is, you got to really show with enthusiasm what you're doing and look in their eye and ask them for other people who you could help.
Yeah. I love it. Yeah, I'm exactly the same way. And just like you said, that's how you get those compounding efforts when you look out for them and their friends and family.
So true. So true. What other hardships have you gone through, in this, as you are becoming a syndicator? Tell me more.
Yeah. I mean, when we first got into the space, we actually didn't raise any money for our first deal. We joint ventured it. And thank goodness we did, because I really just didn't have the confidence to say, hey, I've never done this before. Let me take other people's money, kind of like we were talking about earlier in the show. And man, really our first deal, looking back on it, was very successful because once stabilized, it did really, really well. But, everything went really, really sideways, specifically with our contractors. We didn't know how to manage contractors well. We didn't know to look for the red flags of, hey, you're just getting outright stolen from right here. We didn't have a management team set up in place in that area to really effectively manage this thing. And, I think a big part of it is, and one thing why I love talking about my podcast, Passive Real Estate Strategies, is these things are not passive. Owning real estate is not passive. Investing in real estate is, but owning real estate is not. No. And, we kind of had that misconception too. Hey, we'll buy the property manager will do everything. Contractor will do all the work. The property manager will manage the contractor, and, everything will go well. Yeah. And we were way too hands off on it. We thought that that's how the plays were ran. We put too much trust in teams that we just hadn't worked with before. And, overall, the budget ended up going a couple $100,000 over budget. Wow. We could have probably hit a 50, 60 IRR on the deal after refi, but, it's going to end up it ended up shaking out to close to about 25, which is still very good, but we left a lot on the table. And, if we had bought in a different deal without as much on it, it could have went very south very quickly. So really, that was the biggest wake-up call. Like, hey, this is not an acquisitions game. That's only one facet of this. You need to manage the hell out of these assets And so when we started taking other people's money, we knew exactly what actually needed to be done. We developed and created our systems. We developed and created our team. And we really have been hitting them out of the park since then. But it was a wake-up call that I think that we needed to really let us know, hey, you need to stay on top of these things. You can't just outsource these and let it get taken care of.
So glad, brother, what you're saying. When we were managing ourselves, I think I had 158 full-time people on the payroll on my company, Monil Management Group.
Yeah.
And you're right. We were dealing with millions of dollars of, all these assets, of course, and the rents and all. 5 people in my accounting department alone with my VP of accounting and everything. But, the key thing is, which I want to impress to everybody, like you just said, brother, very nice, eloquently. It's not when you buy the acquisition. It's when you get the keys to that $10 million, $50 million, or $70 million asset. It's what you do with the asset. The management, the real work starts when the whole elephant, it's just the tail. When you got the deal, now it's the elephant. We're managing it. Not too many people talk about it. And that's where it's all about, to make sure that your assumptions are valid assumptions. Your business plan is put into place from day one. Because investors are looking for the cash flow and the equity gains and all that. So it's so true. I think it's management of the asset brings the results. It's not before that,
Yeah. Couldn't agree more. Yeah, exactly. And it was a wake-up call that we needed. And thankfully, we knew that we had the sense to, hey, don't take other people's money until you've done this a couple of times. And that was, we got that out of the way quick with our own money. And, now we're in a lot better spot.
Very good. Very good. How many partners do you have in the GP side, if I may ask?
Yeah. So there's 2 additional to me. So 3 total. Yeah. 3 total. We had 4 actually, but again, part of the growing pains and learning processes, when you need to part ways and when goals really aren't aligned. And so we all manage different aspects of our deals, from asset management to acquisitions to talk to investors, which is what I do a lot of onboarding investors, and, business acumen as well. So we all have really good strengths that fit our silos of what we do. And we have a really good operation team right now.
Beautiful, beautiful. Do you live nearby? Were you friends before you joined hands? How did it all happen? And how did you vet each other? I mean, how did you know they were the right mindset of people to get 3 together? 4, you said, but 1 is out because of different goals. And now 3 are left, and so on.
Yeah. So we don't live together. We actually met through some coaching programs. And so what I did was, when we first joined, is I joined a coaching program that was, cost-wise was a little bit on the upper scale of it, which is what I wanted. I wanted to be around people who were very, very serious about this. I wanted to be around people who put their money where their mouth was. And you go to a local real estate meetup, you can make great use out of those. And there are places, I still go to those as well, but the audience is just different than people who have put up, 50,000 or more to be a part of a group. Right. So we had met through one of those, and really, we didn't talk a lot of shop. We were both really new. We had a lot in common just personally. We had a lot of complementary strengths and weaknesses at the time. And we just stayed in touch. After the conference, we stayed in touch. I found the first deal, the one that we ended up JVing. And I called the guy up and I said, hey, I found this deal. It looks really good. What are your thoughts? Let's see if we could do this together. And really what the goal was, hey, we'll do this one deal. We'll see how it goes. And I think what solidified it for us and the other 2 partners was, well, there were 4 on it at first, is that 4th person, when things weren't going according to plan, really crumbled and shut down. Just crumbled and shut down. Couldn't handle the change, couldn't pivot, couldn't think on their feet to, hey, what do we do? And overall was not able to adjust to things. And we've always heard, and it's always true, no deal ever goes 100% according to plan. Always going to be something, whether that's good something, a bad something, indifferent something always will come up. And the other 2 partners, and, things were not going good, to not sugarcoat it at the time. And we didn't know how this deal would shake out. The 3 of us were gung-ho, hardcore. We're going to do whatever it takes to make this happen. Does it take more money? Does it take more time? Do we need to live in the asset for a little bit till it stabilizes? What is it going to take? and the fourth partner just didn't have that. So, once we saw how that first deal went and continues to operate, we thought, okay, we have the same grit, we have the same goals, and we know how hard we work on behalf of our money. We know how hard we work on behalf of our investors, because it's just been 10x the effort ever since we started taking other people's money. And that deal kind of vetted out people for us.
Excellent. No, that's exciting. And, have you looked into senior assisted livings or anything? I know apartments are good. What kind of unit types are you buying? How many units would you say?
Yeah. So we look at anything, even if it's smaller multifamily, we'll look to JV it or to do ourselves, right? To syndicate, it's got to be a certain size just to make it make sense. But our syndication deals are anywhere from 40 units to 144 units. And so if I've looked into senior living, I haven't, but I don't know if you're seeing this. The past couple of years, market rate multifamily has just been a different game. A lot of yields are harder to come by. If you are really, really, really staying true to your underwriting, you're not doing as many deals as you were a couple of years ago. You're just not. And so we've been looking to get a little bit more creative. Right now, we're raising money for a short-term rental fund that's absolutely crushing it. So I do think over the next few years, we're going to expand what we do with partnerships by partnering with people in the senior living space, in the short-term rental space who crush it there. But we're going to start bringing the money. So I do think over these next few years, more market rate multifamily operators will get creative in what they do. Maybe it's senior housing, maybe it's short-term or midterm, maybe it is LIHTC, maybe it's student housing. But I think there's something there where a lot of very strict underwriting multifamily operators are saying, I think if we want to do the same volume, place the same amount of equity, we have to get a little bit more creative in what we do. So
true what you just said, brother. Even some of the apartment complexes are having a portion Airbnb, we're saying, to increase the revenues in that side. I love senior assisted living. I've been talking in USA for the last 5 years. My new book is coming, Senior Living Investing Made Easy. It shows all the graphs and why Vinney's so fired up and all that. I'm building them from ground up. Now I'll be converting hotels into senior assisted living. I just bought a hotel in Arizona, Scottsdale, and my goal is to buy 9 hotels. If anybody wants to sell a hotel, name brand or non-name brand, reach out to me, because we are raising $100 million right now to be able to buy, and then we'll convert these, because 10,000 baby boomers are turning 65 every night, and 4,000, I think 80-year or 75-year, I need to clarify that, are turning 75 or 80 every night. So there is a huge demand. And the senior livings produce better results than multifamily alone. So I'm into now senior living multifamily.
I love it. And I'm curious too, have you looked into data centers at all? Because that's something that I think is really exciting to me in my preliminary research of it. Has that something that you've ever looked into?
Say that again. What did you say?
Data centers.
Oh, data centers and Bitcoin mining and all that?
Not for Bitcoin mining, but with the explosive growth of AI coming up, really the last 2 months, it was nothing. Now it's all over the place. The amount of data centers that our country is projected to need to sustain AI growth and maintenance is like crazy compared to how fast they could build these. Because you can imagine the type of work that goes into building a data center that can run a Chat GPT or something like that. It's massive. So I don't know, I don't mean to get you off topic, but
no, not at all. I say, matter of fact, brother, one of my partner, we are doing Bitcoin mining. I'm just not selling anybody anything, but we are doing for 12,000 a day, 12,000 per Bitcoin a day. We are mining, and I'm not selling any security, but my investors are getting 2.86% per month. 2.86% per month. That's almost like 36%. And total write-off of the mines, which miners are computers. So 100%, K1s and all that. But then data center is our next one with my partner. We are building one in Texas, actually, and it's going to be humongous. But I'm also into a lot of other stuff. I'm into cybersecurity. Clouddefense.ai is my company. I'm into scarletbooks.ai. That's the AI with the QuickBooks on steroids, I call it. That's the one AI function in accounting where AI tells you all the bills to be paid and it keeps track of everything and all that stuff. Oh my God. Then I've got my PlugXR metaverse company. I'm on the board of directors. I'm a founder, plugxr.ai, where without any codes, you can build your own metaverse right in front of you, right there in your thing. That's my new company and very nice company. It's taken us 7 years now. We are doing patents on that one. And then there's Evoke. There is so much going on in my life. I love it.
Man, that's awesome. No, I mean, it's just something that I think a lot of investors need to look at. Where's the world going and how can we capitalize? You know, you hear also a lot of things about China losing their production superpower by the next, 10, 20, 30 years. So a lot of southern border production is projected to come up over the next generations as well. So yeah, I love to keep on top of a lot of those trends and really help educate people on, hey, what could be the forefront of things and how can we get
exactly. I mean, ChatGPT has totally changed the course of so much, and it's just the tip of the iceberg. I mean, what's going to fixing to happen is amazing, faster, bigger, better, and more creatively advertisings and copywritings and this and that, and writing books and poems. And I mean, I just asked the ChatGPT to give me a poem on success. Because I'm smiling and all that. So it gave me so many great poems on smiling and smiles and success and abundance. And oh my gosh, I can't believe it.
Yeah. They're writing actually right now in production on the first movie ever written entirely by AI.
Really? Oh my God.
So, and whether the movie is, good or mind-blowingly entertaining or not, it's not going to matter. It's a marketing ploy, really, a PR ploy to say, this is the first movie ever written by AI. The whole script, the casting, everything.
Oh my gosh.
So, yeah, it's massive. It's massive.
That's amazing, brother. Hey, it's been such great time kind of hanging out with you, Justin. How can people reach you?
Yeah, if you want to reach me, there's a couple ways. The best way is I always direct people to our website where I offer our free ebook. So if you're looking to invest in real estate, it's called The Definitive Guide to Passive Real Estate Strategies. You can find it at thedefinitive.guidebook.com. If you download it, I'll actually pull out my phone, put it in front of my face and record a custom video just for you. So you'll get to meet me, you'll get to see my face. And then at the bottom of my email, you'll have all my
different. Info. I like that.
So challenge me. I spend maybe a couple hours a day at this point making those, but it's a really cool way to connect. So then you'll have all my info there at the bottom and we can connect.
I see. Thank you again. Thank you for your time, Justin. And I wish you all the success in the world, brother. Let's move fast into all these that you are doing and get into bigger and, bigger scale, more success to you. I appreciate you taking time to be on my show. God bless you.
Thank you, Vinney. This has been fantastic.